should be about live. All right. So same thing as the last simulation sessions. Do you guys want to map out the levels?
Let's do it.
Perfect. So quick little information on what we're...
Sharma, quick thing. Are we recording this?
No, it's going to be on YouTube.
Okay, perfect.
Alright, so quick little backdrop on what are we trading here. This is the same exact setup that we have in the current market and even going into next week. The only difference is that we had rate cuts that we were dealing with back in 2024, but it was pretty much the same level of uncertainty. And then in the current market, we're dealing with more of a rate hike situation. So it's a little bit of a difference in terms of the economic cycles that you're sitting in. But what we're trying to look at is how the market is reacting and the setups that it gives us in terms of the level of uncertainty that it's dealing with and that it's trying to price in. So that's what we have. And the week prior, we back tested that earlier this week to prep for interest rates. So I'm now just skipping over towards the end of the week, which is NFP. Let me just confirm that it is NFP. Yeah, it is NFP. And so we're going to be trading the day before NFP and the day of NFP here. So that's what we have going on from a fundamental perspective. And now it's all ready for you guys to start marking up.
Sounds good. On the weekly, let's do the current candle bottom wick as the support and the top as the resistance.
Sounds good. So what's going on in the zone here? Why is it significant?
It's basically sitting at almost all-time high. On the weekly, I don't see anything on the left-hand side, either any major, basically major points. And then looking at it right now, it looks like it's in consolidation, or yeah. And the reason I say that is because I'm looking at these previous 3 candles. So yeah, it's basically just bouncing in the same area.
Okay, sounds good. Give me 1 second here. It should be live. Showing me live in the studio. Are you guys able to see the live session on YouTube real quick? If not, then I'll start recording on our end.
I see it in live.
Yes, it's live.
Interesting. Why is it not showing up on my end? Okay, that's fine. I mean, if you guys can see it. Alright, perfect. So we have that. We have a consolidation. And we're 30 minutes out from the stock exchange open. Now dropping down to the daily time frame. Is there any adjustments that you guys would like to make here?
Adjustment-wise, support, I would still keep the same. The only other difference is I would call out the range, which is about this area right here.
Okay.
Because here you can see, you can see that point being a support in a couple of places previously, and the price just comes close to it and then bounces right back up.
Okay, that's very valid. But before we get there, this is a daily candle. So we're looking at the current levels that needs to break, right? So in terms of that, would you do the same, or is there a new level that you would map out?
Uh, for this, I would probably put the support down here.
Now look at the current candle.
Oh, sorry, right here. Yeah. Current candle support.
Perfect. So let's go ahead and do that. So your levels are not wrong. What you did identify, those are of course key levels, but before we're headed down there, we have to break below this. If you break below that, then you start targeting the previous lows.
Got it.
So as we drop down to lower time frames as well, even if you're looking for a scalp, day trade, swing trade, whatever it is, whatever time frame that you're on, always focus on what level does it need to break right now, the current candle. Because if the current candle breaks its current high or low, that's the only way that it heads up to the next level, right?
Yes.
Perfect. In terms of another zone, what I would do is leave that resistance up top here. That tells me that's a very strong weekly resistance and shared by the daily as well, the topic rejection. But if price continues pushing, then I know that the next major level is going to be up top here. So what that becomes now and what happens now is that when I see price breaking above this area, let's say on lower time frames, on say the 30-minute, 15-minute, especially when the market is opening up, or I'm seeing that there's high volume time, or like some news is coming out, like in this case, like tomorrow NFP. If that happens, then I know that I'm not looking at trade on the first candle break. I need to wait for established support, resistance, continuation, candle closures, all that good stuff before looking for a trade. Now coming over to the 4 hour, what do we have going on here?
4 hour, I would still keep the same support and resistance. We already identified the major point that it needs to break. Currently, to me, it just looks like it's still just bouncing between our range of keeps on rejecting the resistance and coming back down. The resistance that we have identified so far.
Okay. Now, in terms of scalping, is there anything that you would map out here?
In terms of scalping, again, like we already identified the first range, that this is what we need to look out for a sell opportunity, and for a buy opportunity. Again, like we already have this range, I would try to stay out of this. But if we can see candles closing above this, then probably look for another buy entry. A quick scalp to at least to this point.
Okay, that's perfectly valid. Now, since we're 30 minutes out from the New York Stock Exchange open, we know that's going to be a high volume time. I created this zone so that if we see a continued push up, we have still 66 points that you can still catch on gold to the upside if we can get 15-minute candle closures above this area. At the bare minimum, a 15-minute candle closure. If we don't have that candle closure and the next candle cannot continue pushing, we don't have a trade. But if we get hard rejections off of this, coming back down, and let's say you get a resistance formation here on the 15-minute candle closure bearish, and then a continuation down, then you have about 194 points to the downside that you can catch instead.
Nice.
Now onto the hourly time frame. What's going on over here?
Hourly, same thing. Rejecting the current resistance. Not able to break the previous highs. Still in that zone, I would still stay away from it.
Okay.
And, yeah.
Any recent zones, any recent support resistance areas that you want to wait for a break below for a scalp opportunity?
Yes, I would wait for this to see a break below this, or body closures below this point, before I can take the next entry.
So why here and not up top here?
Because here we can definitely see like at least the price is always coming down here, turning it into a support. Same thing on this side, been a resistance here. That's the only reason I found this as like a safe area for me.
Okay. That works perfectly too. what I would do a little bit differently here is that since I'm only looking for scalp opportunities to push down, I would map out the low of this hourly support. So that way, if price does break back down, then I have a much cleaner sell to the downside that I can catch for still about 127 points. Along the way, about 67 points or so, I can take some partial, let's say a 1-to-1, maybe a little bit tighter than that. But in between, I see that price is, failing to break above, close above, whatever. It's just closing into this range, which tells me that as I drop down to lower time frames, I can expect to see some consolidation. So once price exits out of that consolidation, then I can expect to see some volume to the downside. This is perfectly fine too. If you want to be a little bit more safe on the risk side, a little bit more conservative, whatever. If you want to, you absolutely can. I'm looking at in terms of the range, because now you need a candle closure below that and then a continuation down. You still get pretty good range, about 100 points to the downside, 90 points. And then I'd rather just use this area as my partial and then continuation down.
Sounds good.
So now coming on to a 30-minute, what do we see happening here?
Price is still sitting in that consolidation area, still not able to break past the previous or the current support or the resistance.
Okay. Anything on the 15?
15, same thing. The body's not able to close above the current resistance, so it's still in that range and still want to stay out of it. Yeah, that's it.
Perfect. Let's go ahead and play this. I'm going to skip to the next 15, so we're 15 minutes before NYSE. In terms of news, at 7 o'clock, we have ISM services or ISM manufacturing PMI coming out. And then tomorrow's NFP. So I'm just going to speed this up for the sake of time. But we're seeing candle closures above. The next candle brought us back down. The previous 15, which is the first 15 of this new hourly, closed bullish but right into the zone. And then we have the new 15 here. Check the hourly that made a bottom wick. Price is trying to push back up. So what I want to see is established support and then a continuation back up. If I don't get an established support, I don't have an entry. So the 5-minute, recently we were having a conversation about how the 5-minute is for the volume, right?
Yes.
So in 5-minute, now we're starting to see consolidation here. So what that tells me is that if I were to even jump in, let's say on this 15 as it's breaking the highs, I don't have enough confidence that usually when you take an entry and let's say it's going to be a slow day or you're right in the middle of a session, you see a setup like this, it means that right when you take an entry, you're probably going to be sitting in a lot of consolidation. You're probably going to be sitting in slow movement. You're going to be sitting in pretty much at a break-even point or just below break-even where you're still in the loss, but it hasn't hit your stop loss. It's still not pushing. It's kind of hanging around your break-even entry point. So the 5-minute is used for volume. It's not used for our execution because, like I just said, on the 15-minute, I want to see an established support and then a push back up bullish. So now I see an established support. On the 5-minute, I see that price consolidated here. In the previous 5, even created a top wick, breaking the previous lows, but it came back and it closed right on top of the zone, but right into this consolidation. So that tells me that this will be the first candle, if it does close above this, the first candle closed bullish. So that tells me that that is going to be the first momentum to the upside. But if the next candle cannot give me a bottom wick and then flip back up and close bullish, then I don't have that confirmation for a push back up. We are also approaching into a very key level. That is your daily resistance and your weekly resistance. And we have seen hard sell-offs from that level here in the past. So if I move this, that hard sell-off to the downside in the past. So that is why we don't jump in immediately on any of these candles. The 5-minute tells you, is there enough volume? Now we got a nice push. Now you have a new 5-minute candle formation. So now do we have enough volume to continue pushing? Bottom wick, nice bullish push, or does this candle come back and close bearish? And while you're doing that analysis on the 5-minute, you're still keeping in the back of your mind what the 15-minute and 30-minute setups look like. Are you approaching a key level? Are you seeing some strong candle closures above, let's say, a 4-hour consolidation resistance, or below a 4-hour consolidation support, or the previous high, previous low? These time frames will tell you what is your direction. These time frames will tell you what does your setup or your entry look like. This time frame is going to tell you what is your volume. Make sense?
Yep.
Yes.
These time frames will tell. So now we had a top wick rejection right into those previous resistance areas, and then the next 5 still trying to figure out its direction here. So we just wait. Good to skip so we can get to the 7 o'clock news now?
Yep. Good
Perfect.
to go from my side.
So this is your 7 o'clock news. Let's pull that up. We got lower than the previous and the forecast. Hence the bit of an optimism that you're seeing with gold as the dollar gets a little bit weaker, but we're pretty much in the ballpark area. We haven't dropped down too significantly. And then on the other side, you got ISM manufacturing prices, which is showing you a nice beat of the forecast. We're expecting that it was going to push down from the previous, but we ended up getting a push up instead. Construction spending has also dropped. So you have 2 mixed data points here at the moment. So now what we were talking about. You have your daily level and your weekly resistance. I'm not going to be entering on the first push when price is trying to break above, and especially not when it's a new hourly candle that has no bottom wick here. So what you wait for instead is a 5-minute candle closure here bullish in the next couple of seconds. If the next candle has enough volume to create a bottom wick, respect this area, maybe come back a little bit down deeper here, but continue pushing back up bullish. That is your confirmation that we can keep pushing. And at this point, I believe you're headed right into the next area up top here that we marked off of the daily time frame. But just because price is now breaking past a daily resistance on a 5-minute, 15-minute, or the new hourly, that's not enough volume for you to keep pushing. You need to wait for candle closures before you jump into an entry like that. Or else that's what you call a fake out, and that's where you get a lot of traders trapped. So that retraced and erased pretty much this entire move that happened to the upside. And that is the mixed data points at its finest. For sake of time, I'm going to skip over. So now, this candle came all the way back down, broke the previous lows, and closed at the bottom of the range. What we're looking for here now is the next candle, this current one, to create a top wick and continue breaking the previous lows. But the most important thing is being able to get actual candle closures and then a continuation down. You still can't jump into this candle, right? Because very easily it could just tap into these areas, make a bottom wick flip, and continue pushing to the upside. It can consolidate. There's a lot of different scenarios that can essentially happen here. So that is why we wait for the candle closures and then continuation. Now, if this candle comes back and closes bullish, I still don't have an entry. But what that tells me is that we have buyers defending pretty much down here and price is not ready to continue pushing back down. But let's say this candle closes in the zone, below the zone. That gives me confidence that we have sellers still in the market that are ready to dominate. We're kicking the buyers out. We're going to grab that liquidity and we're pretty much looking to push back down. So you're about to get a 15-minute candle closure here soon too. Now if you come back up to the 15, that's where you have the massive top wicks and bottom wicks. And now price coming right back down and closing into that core consolidation. So it came back and closed right into the zone here. You're still not jumping in because you don't have candle closure. A couple of seconds for this candle to close. And candle closed bearish. Now let's take a look at this on the 15. On the 15 now, you have created a top wick. You close back down bearish with the previous candle, right? But right into the zone. Now you have created a top wick right into that zone and price is trying to push back down. Look at the same exact candle on the 30. That 30-minute candle has created a massive top wick and still has enough volume to break the lows of the previous two 30s. On the hourly, you're also breaking the previous low, right? And the 4-hour time frame has now rejected all the way up top there, tapped right into that bit of a consolidation and pull back down. So across the board, what are we seeing the domination more of? Buyers or sellers?
Sellers.
So what type of trades would we be looking at? Would you be entertaining buys here at all?
No, sells.
Perfect. But it makes sense, right? All the different setups and confirmations that we're getting across different time frames.
Yes.
Now that you got a bearish candle closure here and you have the confirmation, you go in with your risk. Stop loss, I'm still going to keep at the top of the zone. Now the reason why is it over here, not higher up here or anything like that? Because if I am wrong, then I want price to prove me wrong immediately instead of me having to sit here in this drawdown, just waiting for price to consolidate or wick out in the opposite direction and then continue. If it's not ready to move by all these confirmations I'm getting from the 4-hour, 1 hour, 30-minute, 15-minute, 4 higher or 4 not higher, but like intraday time frames already, and the 5 minutes now starting to show me some volume. If it's not ready to move now, obviously this is not my entry. This is not what I want to take. So what we're going to do is target the bottom of the zone here first. Let's tap into this because this is clean movement to the left. So here, now that price is getting so close, you can make the decision. Do you want to take partials here, increase your TP, or do you just want to take partials, or do you just want to let the whole thing hit? It's a day before NFP. I will just be conservative. I'll take whatever it hits here. The main simulation session or backtesting that I want to do is for the next day, which is NFP. At this point, what you can do is just, we can move to break even, we can take some partials, we can do any of that stuff. So you're pretty much done. Risking 2%, you're up 3.55. Now the main day that I want to do the backtesting for, we're going to skip over to Friday at 6:30 a.m. PST, which is right at the stock exchange open, an hour after NFP has been released. So we don't trade the actual NFP because 6 o'clock or 6:30 is really where you get the most volume, right when the market opens up anyways. Alright, so here we're going to delete everything and we're going to redo our analysis. Go back up to the weekly. Alright, so go ahead and mark the levels. What do you guys see here?
Let's do this. This is the weekly, right? Yeah. Mm-hmm. Okay. So let's do here as the support and here as the resistance.
Okay. What about on the daily?
Daily, same thing. Support right here. Resistance, I would still keep the same.
Perfect. Good work. Now on the 4 hour, what do we have going on here?
4 hour, I still keep the same support and resistance. The key things to call out would be this range right here. This is what I would keep an eye on. And then the second range would be this range right here.
Okay, but before we're headed down there, you already have the support. One level that I would map out would be this. Because you have price rejecting into those areas and then pulling back down. Right? We haven't gotten a clear continuation above that area. This is the first candle that's trying to look promising and push back up. The first candle closure that we got up top here was this. After about 2 candles ago, no bottom wick on a 4 hour. Next 4 hour, weak volume. And then after that, bottom wick, push back up, close right above that zone. And the next candle brought you right back down. This one is showing us that price already created a bottom wick into, I'll go ahead and update this. That price already created a bottom wick into this level, and then it's starting to push back up, which is your daily candle's bottom wick. So showing us that, it's trying to grab liquidity and continue pushing. But that could very highly likely actually be just whatever happened with NFP. NFP can create those massive top wicks and bottom wicks too. So here we got a big miss about an hour ago. We had the previous of 179. We're expecting a small decrease of 176. We ended up getting 114 instead. That's a massive miss that happened here. And unemployment rate also ticked up. Okay. Now come on to the hourly. What do we have going on here?
Hourly. So we're still sitting in that little consolidation zone, right?
Mm-hmm.
Yeah, price is not able to break past the range, or at least the next candle, if it closes above the given ARP range, then you can see a buy opportunity. When it breaks the previous candle's high, but it's only up to that small range. So I would technically not do that. At least for my safety, I would not try to get into that because it's too small of a range. But unless you are trailing your stop losses, then or taking partials, that would make sense for me.
Yeah, sure. Okay, so that is still a 60-point range. So for whoever wants to scalp it, absolutely can. But that's the area that, yeah, if price breaks above, that's the only way you have buys, nothing in between, sells below the zone, and a continuation down. All right, now looking at the 30, anything different here?
I would be very, very cautious here because looking at this candle, there's no bottom wick to it. And it's still going up right now. There could be a possibility of it coming back down. But yeah, I would still keep the same thing and just be extra cautious about the support or kind of a range right there. I would keep an eye on that. And the second range, if looking at a sell opportunity, then this would be the second area I would be cautious of.
That only happens if your daily low is broken, right? So first we're targeting this.
Yeah.
All right, now you come back to the 15. What's going on here?
15, you saw the previous candle, or this candle actually, very strong, closing into the range, but the previous candle, not too confident because it was a very small body as well. So unless I can see a bigger body or a little bit more confident in buyers pushing the market up, then I would look for an buy entry.
Okay. Let's skip to the next 15, and this is 15 minutes before the stock exchange open. So you already got a nice pull down, and now we just wait to see if we can get a bounce off of this area for a push back up. Potential buys, you have a big enough range, about 143 points, or do we actually break below it and then continue pushing down? So you're getting a rejection into the daily time frame, which is the bottom wick that we had identified. 4 hour has now broken the highs and lows. 1 hour has completely corrected the previous 1 hour candle's bullish momentum right at NFP. So no matter what happens, you do not jump into this until after the stock exchange has opened up. So we made a massive bottom wick here. Closed back up bullish, looked right to the left of that. What is that?
Sorry, which one?
The current candle? Right to the left of that. What is that?
That looks like a very strong sell, or at least collecting orders, basically.
Yes.
Oh, that range consolidation.
Yeah. So massive bottom wick, flip back up, close right into that consolidation. That's exactly where we're fluctuating at the moment. So that is why you do not enter until the stock exchange opens up. So still close bullish, but close right into that resistance of the consolidation to the left, right?
Yes.
Now you have a couple of seconds left for the new 30 and the stock exchange. Open. Alright, so the previous candle still close at the top of this consolidation. Another example of why you're not jumping in immediately at the first candle, because you're now approaching right into that resistance. And now you're trying to see, are we going to hold on to a resistance here, or are we actually going to pull back down for those sells, or are we actually going to continue pushing back up bullish after establishing support up top here? So about a minute left for this 5-minute candle closure. Check how that looks on the 15. Massive bottom wick, close at the top of this consolidation. Next candle, barely a bottom wick, but pushing right into that zone. So first, you had a massive push up. The following candle right before the open came back down between these two candles, wiped out the bullish momentum, gave you a bottom wick right into the daily support once again, and then now pushing right back up and wiped out this move. On the 5, you still close below the zone. You got a new 5 that broke the previous high immediately, but we're still hanging below the zone here at the moment. So this is where we're trying to see, do we get a bullish candle closure or a bearish candle closure? And that decides, which way are we headed, and if we even have an entry at the moment, or are we still sitting on our hands? Broke the highs and lows, you still wouldn't take an entry on this candle. You're not doing anything at the moment until you have a clear direction of where we're trying to go. Because now this 15 broke the previous highs, tapped right into that resistance, came back down, and we're hanging right into this consolidation here at the moment. So what I'm looking for now is establish another support, and I mimic the same move. You know how we were talking about double entries a couple of months ago? And how to take that in the live markets. We took that a few times in the markets. That's exactly the type of setup that you might end up getting here. For support, push back up for buys. If price is still kind of messing around, giving me weak candle closures, not strong candle closures, it's not giving me a clear direction, I don't have anything. So now before we move on, here's your 15. Came back and closed right into this consolidation now. Okay to skip?
Yes.
Yes.
Okay, now you got a bullish candle closure right on top. Still in consolidation. So at this point, we're 10 minutes out from the new hourly candle. I would just wait for that. So still rejecting right into those previous highs. If you come onto the hourly candle, let's pause this here real quick. Take a look at what happened here in the past hour or even 2 hours. You got a massive push up. And the next hour, just this last hourly candle during the stock exchange open, top wick flipped all the way down, wiped out all those profits or the moves or whatever you want to call it, wiped out this entire move, rejected down here and still closed into the zone. Now you have a new hourly candle that's forming. So once again, do not jump into the first move. Now with this new hourly, you wait for the first 5 to 10 minutes, let it find its direction, and then you have your move. So you got your bullish push. Hold on. Can we get a bottom wick and flip? Or can we get a support formation and flip? Came back down and closed below the zone. Let me pause this, take a look at the 15. Previous 15, rejected right into the previous highs, made a bottom wick, still closed in the zone. And now you're starting to consolidate. Now what you look at is, okay, we have consolidation going on. This is where you would set your alerts. You do not have an entry until you get clear candle closure below the zone, step 1. Step 2, clear of these wick rejections here, which means that you're headed right back down into the support once you get a clear right below this area. If you look at exactly where you got this rejection, into the previous consolidation resistance. Now that's a consolidation that is shared by even the 15, 5, 30 minute, 1 hour, and previous 4 hour break and retest resistance. Got a clear candle closure below. We broke below that level. Can we create a top wick and continue pushing? And we have our sells. All right, top wick, push back down. Got your sells. I'm going to target all the way down here. I'm going to place my stop just above the current 5 minute top wick, right into the zone. Basically giving price enough room. If it wants to create a top wick, bottom wick, it can do any of that. Oh, I flipped this. Sorry. You can do any of that. And I still have a pretty good risk to reward. So I'm going for 76, almost 77 points with 30 pip or 30 points stop loss. Setups across time frames make sense. Any questions?
No questions from me. They do make sense, actually.
Yeah, makes sense. No questions. Thank you.
Perfect. So as prices hanging around here, if you want to, you can continue extending out your TP for the sake of time. I just kept it at that. But that's pretty much our session of finding, I try to find the same exact macro, or at least similar to what we have going on in the live markets. The only difference here is that back in 2024, we were dealing with uncertainty around when are we going to get those rate cuts versus now we're dealing with the uncertainty of when are we going to get rate hikes. But in terms of employment, in terms of the market sentiment, in terms of basic macro fundamentals, this was the closest. Awesome. So this is it. And I will see you guys for the next session on